Hello traders, Gary Wagner here, approximately 10:15 in Honolulu, 4:15 in New York on Thursday, October 29, 2015, and this is the daily report for gold and silver. We have had gold continue on its downward slide, closing off about $10 on the day, $9.74 according to the screen at 11:45.81. That's off of a low of 45.91, so we are on the lows without a question of a doubt. High 62.70 on the day. So as this market sold off the other day, yesterday, a little bits of support started to come off of those lows. I did issue a buy recommendation. Traders taking that call got in roughly at 11:58. Put a very, very tight stop. I only wanted to risk about $10 on the trade. We put our stop just below 11.49. That's this 38% retracement from the most recent rally, in which we saw gold hit a intraday low, roughly call it 1180. It went a little bit below that up to this top at 1190, 1191. Our 38% retracement level comes in right at 1149. That particular price point absolutely did not hold. Traders taking that call in at 58, out at 48 for a $10 loss. On today's report, I want to go through what my rationale was and where I think this market could be headed from here. As this market sold off and sold off dramatically the other day, when I saw a little bit of support enter the market, and this is where we actually took the stab, was when this market began to trade off of these lows. I thought that we could in fact have washed out the low in the market because we were so close in terms of this low right in here to the effective area that I was looking at, which was 38% at 1149. That's what really prompted me to issue a buy signal. In other words, it was right here. But I also realized that if the market could not hold the 49 area, we certainly didn't want to stay long in this market. And that's why I put it just under, giving ourselves, in essence, a $10 risk on the trade. Now, we've definitively broken through this point. So the real question is, where could we see this market trade to on a technical basis? Now, the next real level, and we can look at it in a couple of ways, doesn't really come in till approximately 11:33 to 11:35. On this particular study, you can see that exhibited as a 50% retracement of the move that we just spoke about. But there's a couple other charts that we can look at which give us some similar information. And to do that, we'll move over to the COMEX page, in which we have a real harmonics. Now, this type of harmonics occurs when you have two different Fibonacci retracements from two different price points alluding or pointing to the same area. We have two basic fib harmonics. The short harmonics is really running from 1172 up to this former top at 1171. That's the zero line right in here down to this line here. And in that, the 61% retracement is 1133. The second harmonics we have is from the same bottom, 1072, up to 1232, and that 38% retracement comes in at 1133. So we get an agreement or a harmonics in this particular price point. And so for that reason, I believe that this could turn out to be an important area. And if we continue to see pressure in gold prices, I would expect it to drop to as low as 1133 based upon our studies. Now, gold was sharply lower on the day, and that was even with a U.S. dollar that was weakening and supportive of gold. The U.S. dollar closing off about a 0.5%, 97.29. You can see that here. And in terms of the net change, it added almost $4 in value, but selling in the market accounted for over $14. And that's where we're getting our net drawdown on the day of about $10.60. Absolutely no doubt, gold under tremendous pressure today, trading off, as we said, about $10 on the day, almost a full percentage point, 0.81% lower. Now, the other precious metals fared even worse in terms of percentage drawdown. Silver, for example, down 2% on the day, off 31 cents and trading really below what we believe to be a pretty critical area of support, which was formerly at $15.70. When we look at our weekly candlestick, there's absolutely no doubt, but we have a shooting star that has developed and been identified in the market right here. Palladium also down pretty sharply, considering the move was off over 2% on the day, or about $14 lower. And finally, platinum trading off almost 2% on the day, down almost $20, but below $1,000 per ounce. For the interim, we will maintain on the sidelines. We are awaiting confirmation that this extended wave 4, this corrective wave 4 that we are currently in, has in fact concluded, and we are now entering an impulse or a fifth wave up that will signal our buy signal. This has been Gary Wagner, wishing you as always good trading. I will talk to you tomorrow on Friday for the weekly wrap up. Bye bye.